Hey, yes, sir. Live stream started first time. Today, I need to get water. Today, I'm going to be back testing and studying as well as just trading. I personally don't think that there's going to be any good trades today, so that's why I'm kind of mainly going to be studying today. And yeah, I'm just going to pull over my new week opening gap chart. This is where I have new day opening gaps, new week opening gaps. And today, we actually have a pretty large new day opening gap. Pretty large new day opening gap today. And 31. It's almost July, or almost August. It's crazy. This year's going by pretty fast. 40 handle gap. I'm gonna get the quadrants on this. Color could I use? I look-y want to use gray for these quadrants. Yeah, I like that. Let's darken this up. Two p.m. news wick. Look at that. That's kind of where I entered here yesterday. Very nice. I kind of want to leave this on my chart. I'll leave that wick. And then trade it into new week opening gap low here. That's beautiful. It's beautiful. So obviously yesterday we had this big drop lower, then drop higher. The market went lower to then go higher. Actually, And then ever since then, we've just been bullish. We have traded up into a premium market. And then we have about 50 handles into new day opening gap. So new day opening gap would be my next strong liquidity, most likely, is what we're looking at. But overall, I mean, after this big displacement, I would expect to see some form of continuation higher. We're in all-time highs. Overall, though, bearish order flow that we're in. 5-minute SIBI right here with this big wick. I just want to see lower prices offered. Look at that wick perfectly. Constant encroachment. Looking in this SIBI, we're at constant encroachment of that. Technically, you'd have to include that. Okay, so that's my new week opening gap chart. Midnight opening range. Where is that at? Swept below sell side here. Midnight opening range sell side. 230. Then 330 expands into. I don't need that. Expands into a premium. Negative 2.5. Oh, beautiful. Now we're using midnight opening range. High. Sibby. Sibby. Oh, it's just beautiful, ain't it? Yeah. So from the previous midnight opening ranges that we have to here, that's a lot of handles. So I wouldn't really expect this to get traded into today. Where's my marker? I wouldn't really expect to see a run down here into this one. So therefore we could have some high resistance liquidity run conditions, which is why I'm kind of opting to just study today. Yeah, let's. Okay. Yep. Oh, we just had a sharp move higher. Not that sharp. We have 8:30 news today. So in 30 minutes. 8:30 news. I feel like there could be a pre-market price run today. And then tomorrow we have NFP, so be careful. It's a Thursday NFP. Next week we got kind of a lack of news next week. And then the week after that's CPI and PPI. But CPI and PPI have a day in between. It's a little, that doesn't usually happen. And it is earnings season. Oh, today we have Apple and Amazon earnings. All right. Okay. Friday we don't really have anything crazy. ExxonMobil, I know that's a decent chunk of the S&P, I think. Okay, if we have Apple and Amazon earnings today, we are gonna. I feel like this is gonna be a hard day to trade. Started posting on Twitter. Follow the Twitter if you haven't already. Starting to post my notes on there. I don't know, because like if I post on Twitter, I tend to not post on Discord because it's like I forget and it's kind of a lot, you know. All right. So we have 7 o'clock. And 8:30. There's not that many 15-minute fair value gaps so far. Only have 3. So these are going to be significant. If we trade lower, we're going to trade into this fair value gap and then new day opening gap. Let's do a little post on Twitter. What's good, Money Glitch? What's good, Pedro? It's a volume imbalance? What is? Too early? Nah. I'm gonna start doing my like little studying streams again. Maybe I need to put on some like music in the background too. But not if I'm watching a video. Be honest, like keeping track of everything, all my layouts, it gets to be a lot. I haven't marked opening range gaps in a minute. Are you good? Yes, sir. See, this was a good. This day I used first preventive fair value gap, took a short. I've really been focusing on just doing like little, not doing too much at all. That's really where I struggle with is trying to do too much. And even if I do like a little bit of trading, and then I just sit to the sidelines and just watch price, that's so much more. That's so much better and more productive than trying to do too much, pushing my edge, and then getting burnt out or, that's why I don't love live streaming like every day, which is why it's kind of like I'll live stream when I want to, because then it becomes like, oh, I need to do this, and trading's not like that. Trading's not like I have to clock in. It's, am I in the right mental framework to trade? Number one. If not, then I shouldn't be trading at all. And like I can make money by just doing the least. Did I? Hold up. All right, I'm finishing up this lecture here.
Time, so many trades are going to be formed around previous days highs. And that was the first thing that taught me on baby tips back in 2010. I said the majority of the big nights setups are going to form around old highs on old lows. That meaning the previous day's high and previous day's low. So you can see the elements of that unfolding here. What's this level right here? See, I'm testing the yes, very good. So it trades up, hits that, and drops. Now think about it, okay? I'm telling you how to find the real support and resistance. Is it not respecting these levels? It's perfect. Yeah, it's perfect, right? So it's going right to them hammering. What time of day is that forming? 7:58, 2:58. So we have 8 o'clock hour. We're watching to see what is the price going to do. Well, we have low, relative equal lows, and it's here. So what would you expect to see? It drop. What happens if you miss this move, son? What happens if you see it start to drop? And you miss this reaction here? What are you going to do? You're going to wait. What are you waiting for? Waiting for a fair value gap or a volume imbalance? There's a volume imbalance. And then we have the open. It trades up, goes right into that. There's your short. And what's going to aim for? The relative equal lows that we were just looking at before I did this. Over here. So you have an entry here that targets these relative equal lows and these relative equal lows. Looking further to the left, we have this down here. Isn't that a relative equal low? Yes, sir. And where's the market go? Well, where does it trade down to? Opening gap. Low. Right. And then what does it do after that? Reaction. See, folks, listen, okay? This is why I laugh at all of these asshats, okay, that sit back and say, I reinvented something. I didn't reinvent shit. I didn't rename anything. I'm teaching you stuff that they can't find the source of to be able to say, here's the $5 million payout to me, ICT, because I'm exposing you as somebody that's renamed shit. This is the biggest long running conspiracy theory there has been since I've come out and started teaching. No, none of this information is anywhere else except for initially out of my mouth. This stuff is new. This is the new breed of technology in terms of reading price action. And it's been in my hot little hands for the last 3 decades. And I often wonder why on earth would I absolutely be sharing this? Sorry. It is what it is. But the reaction you get here and it runs up, where if it's going to have this much of a reaction off that low of the new week opening gap, what is reasonable for it to see it reach for? If you're inside of the new week opening gap and it's shown the willingness to want to react this way, it's the midpoint. And then if we're going to see this level breached and pierced on the upside, it does it here. It's dropping that down. Why would it want to drop back down? It's going to a discount, like a slingshot, like I was saying, a slingshot. But it's reaching down into inefficiency because there's no short-term lows in here except for that tiny one right there, which to me doesn't have all that much importance. But my eye jumps right to that. You see that? Yes, sir. So if you're seeing, look at the perfection there. I mean, look at that.
It couldn't have been more precise.
It hits it and then and runs. Same thing over here. Fair value gap drops into it there after taking a short-term low out, rally. It goes back to this level. Now from here, I want to see it trade above this high here. It does, and then we can react off of the consequent approach at midpoint, and then it runs back up to what is this level again?
That is the initial sell side liquidity.
Right. And for the folks that missed what that was or joined the stream late, it was derived from there. So we're not Sam Sidon's online academy. We're not teaching supply and demand. We're not doing classic support and resistance, renaming it and calling it something complicated. We're taking you with a view, a perspective that is technical science. I'm teaching you how to refer back to the same levels at the specific times that the algorithm will do. There's lots of them that I can't teach, but these are the ones that I can teach you where it's perfect really that people say you're just teaching supply and demand or support and resistance because I'm hiding in plain sight. If the lazy people come and see that's what it is, okay, replicate it. If that's all it is, go do it too. They won't. They can't do it. That's why they teach and show examples in market replay. But we are in the opening range. Now, this is the part where we talk a little bit about something that you need to be worried about if you're going to be trading in that 9 to 5 hour, okay? So if you get your trade done beforehand, then don't worry about it. You're taking one good setup. Once you get it, you stop. You're not in here trying to impress dad. You're going to impress me by doing your one trade setup and it pays. Out based on what you're trying to do and you're done. I'm going to be more impressed with your ability to not trade more than you should than taking a lot of trades. Right. I want you to have the ability to sit still because that is what messes everybody up. Everybody does the wrong thing by trying to be more active than they should. All right, so let's get this off here.
That's a note right there.
It's as long as it's trading, you're going to see every candlestick. When I click on this, it's going to give you a regular trading hour option, and it's showing that we're showing electronic trading. Predominantly, I'm going to have electronic trading hours shown, okay? But if you're going to be trading in the 9 o'clock hour, if your trade hasn't formed yet, or if you missed something and you just want to be engaging post 9 o'clock at the opening bell, you're going to set your chart to regular trading hours and watch what it does. Looks different, doesn't it?
Very much.
So what's actually occurring is you're seeing the difference between yesterday's closing price, the regular session hours, and that's using 415. It's very confusing because electronic trading continues still, even though when you watch the TV at 4 o'clock, they ring the bell, ding, 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 and they clap their hands like they fucking did something special. They didn't do anything. Then for 15 minutes, it settles. And at 4:15, there's technically the day session is done. But electronically, it's trading until 5 o'clock. and then it stops and it opens at 6 o'clock. So you can see how this quickly becomes very confusing for someone that's never looked at it and studied it. But for the sake of viewing what it is that's important about this perspective of regular trading hours, we have already arrived at what it has done here as a run up and hit it and then move lower, because this is your initial sell side that was set at the opening at 6 o'clock or shortly after. So when the market runs up in here, hits this level, it's actually hitting also the opening range. The opening range is 9 o'clock to 9:30. And it's down there. Okay, so 9:30 is the opening bell. All of this is the opening range. There is no 15-minute opening range. Okay, the opening range, algorithmically, it's 30 minutes. It's 9:30 to 10 o'clock. In that range, it's doing the same thing that I said when we were looking at the 6 o'clock new day opening gap. It's establishing initial buy side and sell side. That's what it's doing in that 30 minutes. Sometimes the market will just break and never have any kind of opening range impact. It just opens where it opens and it starts running. In this case here, we can see that it's opening and trading back up into not a full return back to the previous close. See, it didn't go up there. It just went right to where I gave you the initial sell side liquidity and how to frame it. Goes right to that, does a majority of the closure of the opening range, this, where we opened from where we closed. That difference is a gap. So in other words, when they're watching price until it opens up, this is what you're looking at, where we stop trading. Okay, we stopped trading the previous day at 4:15, and then regular trading hours. This is what we're highlighting here. Regular trading hours. The next opening tick, the very first print or very first trade at 9:30, it opens up down there. This is the green candle. What is it showing? The opening is the low. Okay, so as soon as you have that, you're going to highlight that entire range and then watch price. You're not pushing buttons. You're watching price to see how it behaves. Normally, not always, normally, when you have such a large gap like that, what will happen is the market will create sometimes it'll open, trade a little bit lower, and then start working higher, drop back down, either take the low that's formed or just like it did here very subtly, and then rally. Why did it run initially straight from the opening? Because we had already taken out this low. See that? And then we worked into that range all the way up to the initial sell side liquidity, not the entire gap closure. That's a huge paradigm shift for people that have asked all the time. How do you know when it's not going to be a full closure on the gap? Well, you're going to implement what I just did here. And all those factors are going to be weighing on whether or not the gap completely closes or not. I like this. Generally, even if the market's going to be bearish and continue going lower after a big gap lower like this, generally you have about a 70% chance. And I say this now, everybody's going to think that means 100%, but it's not. 70% chance that it's going to go back to mid gap. So there's always a trade available when you have a big gap down like that. That right there, trading back into the midpoint, that is good. And look what it did. It trades, and for people that heard that for the first time, they're thinking, well, he's saying that because it happened. But I have traders that have been with me for 12 years now, and they've heard me teach this before. In mentorship, I've taught this. I can't remember if it was 2022's mentorship or if it's just a regular video I did, but I talked about, no, it was live streaming is what I was doing. I was doing live streams, and I talked about how it's easy for the market to get mid gap. So mid gap is really, really, really strong probability. If you gap lower, just find the midpoint, which is what that is. Okay, and you can see it does that, and then what does it do? It goes right back down and just bumps the low. And then you get that run all the way up to the initial sell side liquidity, which could have very easily retouched the close yesterday at 4:15 or half of that wick. Okay, so I want to talk a little bit about the chart on the electronic trading. So doesn't the chart look totally different now?
Mm-hmm.
Very confusing, isn't it?
Very.
So you have to have reference points. And what that does on my phone, usually I'll scribble, the key levels. Like I'll have the levels in numeric format here, and I'll write down new week opening H, and then the date it was on, and that's what's scribbled on my pad. Everybody wants to see my notepad that's next to my charts as I'm doing it, like it's going to give them something special. And all it is I don't want it on my chart. I just want to have the reference points. And as I'm watching price, like right now, it's trading at 18,482 and a half. Okay, I'm looking at my notes, and my notes say I have new week opening gap high at 18,513 and a quarter. So I'm in close proximity to that. So it could come back and gyrate back up into there. It can do so even further because we have what in play? What's this?
The initial sell side liquidity.
No. Visually, what is this? What are they? Relative equal highs.
Yeah.
Yes?
Yes.
This high and this high are relatively equal. And then you have this one over here. Even though we bumped it a little bit, that right there is still too clean for me. It's too clean. So I want to sit back and watch and see, do they have any interest in trying to press back above that? I think that if they're really going to dump it today, going into the weekend, because there's a whole lot of things going on in the Middle East that everybody's afraid that it's going to pop off, and those types of events that are looming, that is always going to be used as a stimuli to upset, engineer, or impact sentiment or how people see trading. If it's risk on, which in my opinion right now it's risk off. Risk off means that there is no one willing to really try to go in and think that we're at a long-term buying opportunity because there's so much uncertainty. That's kind of like what I'm getting at. There's too many things that can go wrong, and that scary type of looming event on the horizon could cause stocks to tumble because the street money thinks that that's what causes the market to drop, and that's not what it is. But the algorithm and the people that have control over it, they will. There's so much uncertainty. That's kind of like what I'm getting at. There's too many things that can go wrong, and that scary type of looming event on the horizon could cause stocks to tumble because the street money thinks that that's what causes the market to drop, and that's not what it is. But the algorithm and the people that have control over it, they will manipulate price so that way the sentiment is shifted based on the assumptions that WAR events would possibly be a catalyst for why the market crashes or has unfavorable price action. Okay, so there's a lot of things that you have to weigh out over time, in your development. But initially, knowing what to look for and then studying these fluctuations around it and studying how the market behaves. And then studying these fluctuations around it and studying how the market behaves around these elements of reference and time and price. What are we talking about? When we say time, obviously, there's specific times that I'm teaching you to look at. But what's the price aspect? At that time, are we referencing an inefficiency or are we referencing liquidity? You see how that's very simple. I don't want to promise a specific date because
Oh, was that what was that? 128. All right, I'll probably finish that up later, but I want to watch 8:30 news just real quick. Don't fall into the trap of keep learning. Yeah, I would agree. That's kind of where I've fallen short sometimes. Is I want to learn more, but I already know enough, 100%. And I feel like I want to learn more to avoid risk. But that's just me not wanting to accept risk. I've gotten a lot better at it though. But I mean, I obviously don't think there's anything bad with constantly learning and refining. But if it's just toxic to you as a person, yeah, it's not good. All right, so we're trading up into our 15-minute fair value gap. So we're looking at, and now it's 8:30, about to be 8:30 for news. We're in midnight opening range here, and for me, that's the only prominent arrays I'm really looking at right now. Is midnight opening range and yeah, those 15-minute fair value gaps. That's it. I mean, we have highs, short-term high, short-term high. We don't really have any short-term lows. And NQ created a large wick. MNQ didn't. Buy side reached.